Now, finally, before we start talking more about stock specific, if there's any slide I want you to take away from today's webinar is this one. We speak to a lot of investors, and one of the questions we get asked very often is, when is the best time to invest? And really, the answer is all the time. And this is really important to understand. We've noticed that investors, they always tend to worry when markets get close to all-time highs, yet we expect markets to continue rallying. Now, historical US data shows, if you look at the chart on the right-hand side, the bar chart, US data shows over the last 60 years that if you only invested on days when the market reaches all-time highs, you can produce better returns than otherwise. Now, intuitively, that might not make sense to you, but if you think about it, markets tend to go up over long periods of time. In fact, over the last 100 years, markets tend to always go up. And if you look at that chart on the left-hand side, that shows you 80 years of bull and bear markets. And the dark blue color that dominates this chart is bull markets. It shows you that the majority of the time markets go up. And if markets go up, they have to make new highs. So there's a better likelihood that when a market makes a new all-time high, it is on an upward trend and probably in a bull market, which can last many, many years. And so I think that it makes a lot of sense. Now, as I mentioned, for those that don't know, bull markets, when the markets go up over 20%, and bear markets are when you have drawdowns of 20% or more. Bear markets tend to be very short and brief in nature. It's that orange color on the chart. And as you can see, on average, they last for 15 months. We've had one which lasted exactly 15 months back in 2022. We believe that we're beginning of a bull market that's probably 1.5 years old. And we think that over the next 5 to 10 years, this will be a very, very strong bull market that will be driven by what's happening within AI innovation and so on. So, it's really important not to time the market, but to be in the market.